It's coming. Hell on earth. This is it. The financial troubles of China Evergrande Group, a major Chinese real estate developer, and its potential implications for the U.S. economy and various stakeholders, including but not limited to the American people, investors, government, and businesses, are real. The broader property crisis in China refers to the challenges and issues faced by the country's real estate sector, which has been a significant driver of economic growth over the past few decades. This crisis has manifested in various ways, including oversupply of housing, rising debt levels among developers, slowing sales, and concerns about the sustainability of the sector's growth. Here are the key factors and details of the broader property crisis happening right now in China. Number one, oversupply and overinvestment. China's rapid economic growth led to a surge in urbanization and housing demand. In response, many property developers embarked on ambitious construction projects, resulting in a significant oversupply of housing in some regions. This oversupply has led to vacant properties and downward pressure on real estate prices. Number two, debt accumulation. Many Chinese property developers took on substantial debt to finance their projects. As housing demand slowed and oversupply increased, some developers struggled to generate sufficient revenue to service their debt obligations. High levels of debt have made these companies vulnerable to financial stress and default. Number three, speculative investment. Real estate has been seen as an attractive investment option for many Chinese citizens. Some individuals and investors engaged in speculative buying, purchasing multiple properties with the expectation that prices would continue to rise. This speculative behavior has contributed to volatile price movements and potential bubbles in certain regions. Number four, government regulations. The Chinese government has implemented various measures to curb property speculation and control housing prices. These measures include restrictions on property purchases, higher down payment requirements, and limits on the number of properties an individual can own. These regulations were aimed at promoting more stable and sustainable growth in the real estate market. Number five, the economic impact. As the property sector is a significant contributor to China's economy, accounting for a substantial portion of GDP and employment, a slowdown or crisis in the sector could have ripple effects on related industries, including construction, manufacturing, and financial services. Additionally, a declining property market could impact consumer sentiment and spending patterns. Number six, contagion risks. The interconnectedness of the Chinese financial system means that the challenges faced by property developers and related industries could potentially spread to other sectors. Financial institutions that have extended loans to developers could face risks if those developers default on their debt. Number seven, government response. To address the property crisis, the Chinese government has implemented both monetary and fiscal measures. These include interest rate cuts, relaxed lending requirements for home purchases, and support for affordable housing initiatives. However, balancing the need for a stable property market with the risk of excessive debt accumulation has been a challenge. Number eight, global economic implications. The Chinese property crisis has the potential to impact the global economy, as China is a major player in international trade and its economic health has far-reaching effects. A significant economic slowdown in China could lead to a decreased demand for goods and services from other countries, ultimately affecting global trade flows. And so you see, the broader property crisis in China revolves around issues such as oversupply, debt accumulation, speculative investment, government regulations, and the potential for economic impacts and contagion risks. The Chinese government's efforts to manage the crisis while promoting sustainable growth remain critical to the stability of both the domestic and global economies. Which is why I want to use this video as a way for us to all discuss a possible likelihood and near future scenario involving the collapse of China Evergrande, which is a major Chinese real estate developer, and its financial struggles, problems, and difficulties that will have an impact on us all and the entire world. And in doing so, I hope to provide you with a general explanation of how such a situation could potentially impact and severely downgrade the U.S. economy, American people, investors, government, and business amidst a looming recession, tumbling stock market, and a reverse housing market crash. Oh, and right before a major, extremely controversial, and pivotal presidential election. So let's begin. First, it is important that I inform everyone of exactly what just happened to China Evergrande, a company that's reportedly been facing significant financial challenges, including a massive debt load. A major Chinese real estate development company that, if they were to undergo a debt overhaul or file for protection in a U.S. court, it could have several and severe implications, all of which would include major impacts to all the following people: investors, U.S. businesses, Western government, GDP, jobs, employment, income, and savings, and in summary, the entire U.S. economy, and ultimately nearly 99% of all the American people. First off, with number one on the list being investors. Whereas investors, if U.S. investors hold bonds or securities issued by China Evergrande, the uncertainty surrounding the company's financial health and its actions could lead to a decrease in the value of these investments. Investors might become concerned about the repayment of their investments and could experience financial losses. Number two, the American people. If the financial situation of China Evergrande were to worsen significantly, it could impact broader financial markets, potentially leading to increased volatility. This could have indirect effects on retirement accounts, investments, and overall economic confidence, affecting the financial well-being of the American people. 3. U.S. businesses. If China Evergrande's financial issues escalate, it could disrupt global supply chains, especially if the company is involved in various industries. U.S. businesses that rely on materials or components from other China Evergrande related entities might face supply shortages or increased costs, impacting their own operations and profitability. Next, U.S. government. The U.S. government could potentially be affected through various channels. If there's exposure to China Evergrande related assets within the U.S. financial system, it could lead to concerns about systemic risk and financial stability. Additionally, the government might need to respond to potential market disruptions or diplomatic discussions with China, depending on the severity of the situation. And lastly, U.S. economy as a whole. A significant disruption caused by China Evergrande's financial troubles could contribute to global economic uncertainty. The U.S. economy, being interconnected with the global economy, could experience repercussions through reduced trade, disrupted financial markets, and decreased business and consumer confidence. So you see, in summary, the financial troubles of China Evergrande and the broader property crisis in China could lead to several obvious negative impacts and create significant risks and threats for banking systems, financial institutions, and consumers in general. And here are some of the potential consequences and obvious negative impacts that will follow. Investor losses, global market volatility, supply chain disruptions, shortages and empty shelves, increased demand with limited supply and higher prices, further allowing inflation to spiral out of control despite the Fed and their interest rate hike intervention, leading to weakened consumer confidence and the beginning fallout of businesses, small, medium, and large, leading to a historic and epic total market correction. And starting with investor losses, investors holding bonds or securities issued by China Evergrande might experience losses if the company undergoes a debt restructuring or bankruptcy. This could particularly impact those who have invested in Evergrande's debt securities. Then, global market volatility would ensue because as the uncertainty surrounding Evergrande's situation could lead to increased volatility in global financial markets, thus affecting not only the value of Evergrande related investments, but also causing broader market fluctuations, which would be an important ingredient in creating the next wave of supply chain disruptions, as all the businesses that rely on supplies from China, including those related to Evergrande's operations, could face disruptions in their supply chains. This could lead to production delays, increased costs, and potential shortages of goods. The result? Well, far worse than we have ever seen previously in just a year or two ago. Next, consumer confidence. The property crisis and financial turmoil in China could impact consumer confidence both domestically and globally. Uncertainty about the economic situation might lead to reduced spending and investment, affecting overall economic growth, leading to the alarming risks and the threats to banking systems, financial institutions, and inevitably consumers. If Evergrande defaults on its debt obligations, it could expose financial institutions that hold its debt to significant credit risk. This might lead to losses for banks, investment funds, and other entities that have exposure to Evergrande's debt. Meanwhile, the interconnectedness of the global financial system means that problems in one company or sector can spread to other parts of the system, meaning the interconnected nature of financial institutions' exposure to Evergrande could potentially lead to contagion risks, impacting the stability of financial systems around the world, and increasing liquidity issues. A scary thought while we are currently trapped in this insolvency nightmare, as a large-scale default by Evergrande could strain liquidity in the banking system and financial markets, making it difficult for institutions to access the funds that they need to operate smoothly. No more loans, funding dries up, capital restrictions, bank runs, the end of the fractional reserve banking system and financial system as a whole, or better yet, the mental construct as we all know it. Trust and confidence would cease to exist. And that would be terrible because these financial institutions rely on trust and confidence to maintain the stability of the system. And if a major crisis unfolds due to Evergrande's troubles, it could erode trust in the financial sector, leading to capital flight, decreased investments, and potential bank runs, triggering huge regulatory response from leaders around the world. This significant financial crisis could prompt regulators and governments to intervene in order to stabilize the situation. Regulatory responses could include emergency measures, bailouts, lockdowns, or restructuring, all of which might have implications for the operations of financial institutions and consumer access to funds, directly impacting consumers through these banking system disruptions, as financial instability could impact consumers directly, bringing them to their knees, many of whom do not have liquid assets, sufficient savings, and little to no investments, and rely on solely one income stream in order to get by and barely struggle to make it from one paycheck to the next. Ultimately, access to accounts, loans, and financial services might be disrupted, leading to inconvenience and potential financial hardships for individuals and businesses. We would witness the erosion of market confidence, and if the crisis stemming from Evergrande's troubles leads to broader doubts about the stability of the financial system, it could undermine investors and consumer confidence, potentially leading to capital flight, market sell-offs, and decreased economic activity. All of these negative impacts resulting from China Evergrande's financial troubles and the broader property crisis could extend to banking systems, financial institutions, and consumers. And we know that the interconnectedness of global financial systems means that problems in one part of the world can quickly spread and create a domino effect of economic and financial consequences. Additionally, it's important for policymakers, financial regulators, and market participants to closely monitor the situation and take appropriate measures to mitigate potential risks and stabilize the financial system before the threat becomes a full-blown reality and a massive global economic shutdown. Survivability would be challenging to say the least. So now we must ask, what would be the best plan and strategy for an individual person or family to get best prepared to survive a global economic collapse, a problem of epic proportion that could stem from the fallout of the financial troubles and likely result of China Evergrande? Well, when preparing for a potential global economic collapse stemming from financial troubles like those of China Evergrande, it requires a combination of financial resilience, prudent planning, and adaptability. While it's impossible to predict the exact outcome of such a scenario, here are some basic steps that individuals and families can consider to better position themselves to navigate challenging economic conditions. First, build financial resilience. Do you have an emergency fund? Begin by establishing and maintaining an emergency fund that covers at least 3 to 6 months worth of essential expenses. This fund can provide a safety net in case of job loss or unexpected financial setbacks. Then, work to reduce debt. By working on paying down high interest debts such as credit card balances and personal loans, and being debt free or having manageable debt levels can reduce financial stress during economic uncertainty. Having a clear head and the ability to think without the added stress, anxiety, pressure, weight, and burden of trying to make minimum payments on large sums of unmanageable debt will be an invaluable godsend during times of global financial ruin and future uncertainty. Next, diversification. We're always looking to diversify investments and ensure our investment portfolio is well diversified across different asset classes, stocks, bonds, real estate, you name it, as well as geographic regions. Diversification can help mitigate risks associated with the performance of any one sector or region, and that is never a bad idea. We are also taking into consideration safe havens because in uncertain times, some investors turn to assets traditionally considered safe havens, such as gold, U.S. Treasury bonds, and other stable investments. The focus on essential needs shifts. First off, budgeting. A review of your monthly expenses and creation of a budget that prioritizes essential needs such as housing, food, utilities, and healthcare can not only provide laser focus on ways to cut back on non-essential spending, it can also be an easy way to save more money. The ultimate goal is to create a sustainable lifestyle. And by taking into consideration the adoption of a more frugal and sustainable lifestyle, which can help you reduce expenses and increase self-sufficiency, will be a very useful skill to hone sooner rather than later. And speaking of skills, enhancement of existing and new skill sets and education is a must. Skill development and investments in learning new skills or improving existing ones that could be valuable in various job markets. Essentially, knowledge, which is something that can never be taken away from you. Continuously learning and staying updated with relevant industry trends and advancements to keep moving the chains forward are what separates the winners from the losers. And staying focused on lifelong learning can help you adapt to changing economic landscapes very, very quickly, and often with little to no financial impact to you or your family. And another important tool to stay a proficient user of would be that of strengthening personal networks. This can include community engagement. Build a strong network of friends, family, and local community members who can provide support and assistance during challenging times. This can go a very long way, and if you are on the giving end opposed to the receiving end, then it is certainly a feeling that is almost indescribable to know that you were able to help a neighbor or a friend or someone in your community in their time of need. And don't ever forget to protect your assets and investments. Pay close attention and review your insurance coverage, including health, life, and property insurance policies. Adequate insurance can protect you from unexpected events. And I don't want to sound like a broken record here, but reducing our reliance on debt and understanding the importance of and value of savings over credit will allow you to prioritize saving for major purchases rather than relying on credit. This minimizes your exposure to interest rates and credit market volatility too. For some, consider geographic diversity. This may be one of the most underrated strategies that is often overlooked. And if feasible, consider diversifying your assets and investments across different geographic regions. Because again, this can reduce risk associated with regional economic downturns. And most importantly, continue to stay informed. Listen to and digest the latest economic news to make sure that you stay informed about global economic trends, potential risks, and developments that might impact financial markets. Understanding the broader economic landscape can help you make informed decisions. Remember that these steps are general guidelines and may need to be tailored to your specific circumstances and risk tolerance. Preparing for economic uncertainty involves a mix of financial prudence, flexibility, and a willingness to adapt to changing conditions. Consulting with financial professionals or advisors can provide personalized guidance based on your individual situation. So let's recap. And allow me to break down for you in a list of the 8 major impacts that are likely to be expected and all that we should be preparing for in the event of a total collapse of China's Evergrande. Here's a breakdown of the key points and how they could have a crippling impact on global financial markets. Number one, China Evergrande's bankruptcy protection filing, as Evergrande has filed for U.S. bankruptcy protection under Chapter 15 of the U.S. Bankruptcy Code. This step shields non-U.S. companies undergoing restructurings from creditors who might sue or tie up assets in the United States. This indicates that Evergrande is approaching the end of its restructuring process after more than a year and a half of negotiations with creditors. Number two, impact on U.S. investors. If U.S. investors hold bonds or securities issued by China Evergrande, the bankruptcy filing could lead to uncertainty and potential losses in the value of these investments. Creditors might face challenges in getting their money back, which could negatively impact the financial well-being of investors. Number three, impact on U.S. businesses. Because Evergrande's financial troubles could disrupt global supply chains, affecting U.S. businesses that rely on materials or components from Chinese entities linked to Evergrande. Supply shortages or increased costs could hinder the operations of these businesses and potentially impact their profitability. Number four, impact on U.S. government and economy. Whereas the U.S. government might need to respond to potential market disruptions caused by Evergrande's bankruptcy filing, and global economic uncertainty resulting from Evergrande's situation could lead to reduced trade, disrupted financial markets, and lower business and consumer confidence, thereby impacting the U.S. economy. Number five, contagion risks and financial system stability. Evergrande's troubles are part of a larger property crisis in China, which is causing concerns about contagion risks to the global financial system. The instability in China's property sector could have a destabilizing impact on China's economy, which could in turn affect the global economy, including that of the U.S. Number six, economic outlook and investor confidence, as China's economic slowdown and property woes are impacting global markets. Because lowered growth forecasts for China could affect investors' confidence in these global markets. Market declines and decreased investor confidence could have indirect effects on the U.S. economy and investments. Number seven, Chinese government response. China's efforts to address the property crisis through rate cuts and policy adjustments might not be sufficient. And according to analysts, if China's stimulus measures do not effectively address the situation, it could lead to further economic instability and potentially impact global markets. And last but not least, number eight, global market volatility. The uncertainty around Evergrande's financial health and China's property crisis has led to volatility in global markets. Market declines like the drop in Asian shares and concerns about China's economic health could have spillover effects on U.S. markets and investor sentiment. So, I really hope that this video helped you to understand the financial difficulties faced by China Evergrande and how the broader property crisis in China could have the potential to create ripple effects that could impact the U.S. economy, the American people, investors, governments, and businesses. The interconnectedness of the global economy means that significant disruptions in one part of the world can have far-reaching consequences for various stakeholders in other parts of the world, including the United States. And we also highlighted how any substantial financial turmoil related to a major Chinese corporation like China Evergrande could create ripple effects that impact the U.S. economy and its various stakeholders. The extent of the impact would depend on the severity of the situation, the level of exposure that U.S. entities have to China Evergrande's assets, and the responses of relevant parties involved. Feel free to leave questions in the comments below. Please like the video and subscribe for more. And I hope that you all have an amazing, wonderful, and fantastic day.